Let's talk about how tip worker can legally pay almost no federal income tax under this new 2025 law. And no, it's not some shady loophole. It's right here in the tax code. Here's how it works. Starting in 2025, you can deduct up to 25 grand of qualified reported tips from your taxable income. That means tips you already reported, whether they came from cash, cards, or apps like DoorDash and Uber, can now be completely excluded from federal income tax up to that limit. Let's walk through a real example. Say you make 30 grand in wages and another 20 grand in tips. Normally, you would pay tax on all 50K, but with this $20,000 in tip, it's gone because now you only tax on the 30K. When you take your standard deduction, so that about another $15,750 if you're single in 2025, and boom, your taxable income dropped to around 14 grand. That's a massive difference in what you actually owe, and it's perfectly legal. If you are married and find jointly, you still share that same 25 grand cap per return, and the deduction phases out about 150 grand for single and 300 grand for joint income. Just remember, this is not an income tax deduction, not a full exemption from everything. You will still pay Social Security and Medicare taxes on those tips because payroll taxes is still applied. So to make that work for you, you want to keep your records, you want to report your tips accurately and take that deduction every single year from 25 to 28 while it lasts. Want me to show you how much they could save you based on your income? Like this video and check out the full breakdown in my main video, links in the comments.